folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 52, NASDAQ up 47, S&P's up 4.5. Bottom line, doesn't look like a lot, folks, but guess what? Let's go over and start looking at the Dow, because what you're going to see from the lows to the highs, you had quite a move out here today. We had a low that was established out here at 24,667, and it moved 200 points off of that baby. Now, what do you have? Well, guess what? We have Memorial Day weekend. You have window dressing. We're coming into Thursday. You're going to get light volume out here. You get a holiday weekend. People are feeling good. This baby's going to try to get into the highs once again. And in the Dow Industrials, that's 25,086. We go take a look at the NASDAQ composite. What do we have with the composite? Composite from the lows to the highs out here today. We got to a price point. Hit a low of 73.34. Bottom line, you're up 90 points off of that number. Now, this is what's really cool here. This is pretty wild how this is shaking out. When you look at the composite, this is what we have. This is just about a last engulfing. Now, yesterday we talked about a TriStar Doji and the dollar index. Bottom line, you didn't get follow through today. The TriStar Dojis are very hard to set up. I'll go over that when we get into the dollar. What you have here is that this is just about a last engulfing. And what a last engulfing is this. It looks like it's bullish, but it's actually bearish. What you do first is that you have to have a prolonged uptrend, which we have. We're at 68.08 in April 2nd. You go up to the high, and then you start off on a low, you go up to a high, and bottom line is that that's what we're facing here. Now, that being said, I don't expect this thing's going to fall apart tomorrow. You want to pay attention to it, though. The reason being is that you are still coming into the gap that's over here from the 19th, and one of the main reasons I don't expect we're going to be falling apart is the aspect that trading desk folks, the beginning of summer, for all you folks, of course, up the northeast, out in the Midwest, it's been a vicious winter. Bottom line, people are going to get out of town. The trading desk in New York and Chicago are going to get out of town early. The NDX 100, same type of setup in the NDX. NDX started lower today, got higher. I do expect what you're going to see, though, this NDX, the Qs, they want to get into this gap up here. The gap, the bottom of the gap is 170.93. Right now, you're at 169.60. Now, the correlation, now this is where this gets really cool. So picture this. We have the indices that snap back again, once again, as they've done continually. The S&P is still coming into a monster supply line, that supply line being the February and March downdraft. NASDAQ composite, better number, that's coming up into the gap. The IWM, let's go over to the IWM and take a look at the IWM. This is the small cap. Bottom line, the small cap, the number to keep your eye on is the 160.62. We get over it, we come back underneath it. Bottom line, you're over it again, and that says you can go to higher price. Now, that being said, the note and bond market, folks, is saying that money is going into safe vehicles once again, and it came in fast and furious. The 10-year note went up 17 ticks. Now, the 10-year does not go up a half a point a lot. I'll go down a half a point a lot. Bottom line, that's a very large move. We did this move with conviction. We're right under the higher trading range. The higher trading range inside the 10 is 119.14. What I do expect we're going to see is that we're going to get inside of that. What the 10-year did do is that it broke the downtrend that's been in place since April 2nd. Then it broke it with conviction. When you take a look at how this broke this trend line, it just ripped it apart. So that's saying the 10-year is going to be on its way to 121.12. Right now, the yield on the 10-year did come back under 3%, which many folks thought we'd never see in a long period of time. Right now, you're at 2.98. The 30-year, you talk about a movement, folks. The 30-year, that baby not only went topside, we went up a full point and 8 ticks. The 30-year, we haven't seen this type of volume in a long period of time. If we've seen it, I can't actually remember when I've seen 500,000 contracts. Well, we had 460,000 contracts when we went higher the 22nd of March. We did 500,000 contracts in the 30-year, folks. That says two different things. There may have been people, a lot of people short the bonds because bottom line is it's saying on a continual basis, guess what? Rates are going higher. They might have had a cover, whatever, just people buying. Bottom line, this got inside the higher range in a huge way. We are going up into the 147.03 mark inside the 30-year. 30-year right now is yielding 3.14. And the high for the year, which was last week, was 3.24. So notes, bonds, bottom line, higher price, lower yield. If we look at the TLT, the 20-year plus bond ETF, you're going to see volume came in on that. We did 9 million shares. You're into the gap. This also wants to trade, looks like it wants to trade up into this 122 area. Yeah, 122. We're at 117.94 right now. Gold contract. What do we have with gold? That also got some movement out here. That did reject lower price. Gold needs a lot more help, though, to get in the higher range. What we did get out here today is that you got the volume behind the move. We did 390,000 contracts. That's big contract volume. You're pushing into the supply line, and this supply line is going to be vicious. The supply line is from the downdraft of February of May 15th. That's when this contract went from $1,315 down to $1,288. That came down with the vengeance. That came down with 485,000 contracts. We right now at $10. We got $10 into it today. That's a good indication that we're going to basically try to make it up into the area of $1,314. Now, $1,314 is only the beginning of the higher range. So what I don't want to see is that I don't want to see us get up to that level and stop. I'd rather see us get up before that level, build some cars, then blow through that area. Stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. I'm right back.